Hey, how's it going? Today, we're going to be talking about the company HEXO, Hydropothecary, HEXO. Is this company a buy? Is this pot company a sell? Is this pot company crashing? What's going on with this company? That's what we're going to be talking about in this video right here. So, we already know that in the very short term, that HEXO is on a downward trend. I just made $5 million. $5 million. That's $5 million the past month investing. As you can see, I have more than $100 million. Subscribe to my channel so I can teach you how to make millions.
Let me tell you about my day so far. Coffee in Paris, surfed the Maldives, took a little nap on Mount Kilimanjaro. Oh yeah, and I got digits from this Polish chick in Rio. And then I jumped back for the final quarter of the NBA Finals. Courtside, of course. And all that was before lunch. I could go on, but all I'm saying is, I'm standing on top of the world.
Hey, how's it going? Today, we're going to be talking about the company HEXO, Hydropothecary, HEXO. Is this company a buy? Is this pot company a sell? Is this pot company crashing? What's going on with this company? That's what we're going to be talking about in this video right here. So, we already know that in the very short term, that HEXO is on a downward trend. But when we look at the full picture, we can see that HEXO is actually on an upwards trend, despite the short term loss. But when we look at the PE ratio and the PE forward and the earnings per share, you can see it's all in the negative. This is because this company is not only losing money, but on top of that, it's expected to lose money in the short term, and also in the short future. So when we look at the news, we can see that HEXO is competing with all the other cannabis marijuana stocks. There's quite a few in the game right now, and only a few winners will be left on the table. Who's those winners gonna be? That's the question that we're going to be finding out. So when we look at the analysts, we can see the analysts love Hydropothecary. Can somebody tell me how to pronounce this Hydropothecary? What the hell? What is this? Hydropothecary. This is weird. Hydropothecary. This is like, sounds French. Bonjour, oui oui. Anyways, when we look at the analysts love HEXO. They love this stock. Now when we look at the price range of it, we can see how it's at the $5.42. The current right there, you can see it says current $5.42. The average is actually $6.92. So this is actually, some can see this as quite of a discount right now. So if you're hoping to buy this stock, now is a good time to get in. And we can see actually the trend, the support and resistance analysis. We can see that it's actually on an upwards trend. This is good news. for HEXO. So even though HEXO is losing money and is expected to lose money, it's still quite popular and it's still increasing when you look at the graph and when you look at the chart. So it seems like many people are supporting this company. This company has a lot of support right now. When we look at the financial forecast, we can see that it's actually headed slightly downwards. When we look at the year to year, we can see it is actually expected to actually lose not as much money, but it actually declined. But when we look at the revenue also didn't meet their estimated revenues. This is not looking good. When we look at the balance sheet, we can see that it's also been decreasing over the years, except only when we look at the debt. Actually, the net debt has actually been decreasing, but the net asset value has increasing. This is good. This is actually quite good. When you look at the CPS, we can see that it's actually been getting lower. And when you look at the capital expenditure, it's been growing. And when we look at the finance ratio, we can see that it's actually it's climbing its way, slowly climbing its way from the negative range. Once this company gets into the positive range, that'll be a game changer. But when we can look at the net income, look at this. This is bad news. We can see that it's losing a lot of money. This company is just blowing off money. But the good news is when you look at the balance sheet, you can see that this company does not have a lot of liabilities. This company is purely running on its assets. So this company, yes, it's losing its own money mostly, but if this company can turn things around, then we can see this company growing out of this close to penny stock range. This company's like getting close to the penny stock range. So once this company is able to claw its way out, you can see a reversal, and this will be good news for this company. We can see that people over here, they see that HEXO has a bad technical rating, but it does show a decent setup pattern. HEXO, 48,000 shares. Let's see how far this goes. It looks like these people are seeming to loving it. Should be a great week over here. And we have, let's see what else people are saying. If I could only own 2 cannabis stocks, it would be VFF and HEXO. I haven't done a video on VFF yet, but we can check that out. We can see all these people are bullish, higher lows. HEXO, allocate shares here on each and every dip, but anything under 6 will make it look like smart money. Once this hits, it's new catalyst. HEXO, very rarely do I say don't flip for pennies. You watch this one because it's not worth flipping pennies. This is gonna boom big, and this Ultimate G's seems to be bullish. So most of these people are bullish, as we can see. Most of them are bullish. moved my money from Neo to this. So this person is moving their money from battery powered car company like the Chinese company Neo, the Chinese version of Tesla, to like cannabis stock like HEXO. We can see Guapo Guzman buying up shares, gonna load up as time goes on, looking like no more erectile dysfunction. This is funny. So we can see all these people are bullish. All these people are bullish. HEXO, it's like the beginning of the internet, and at the end of the prohibition, one might say perfect storm. So when we look at the news, we can see that HEXO seems to be competing with the major marijuana companies. So nothing major when it comes to the news, but when we look at the analysts, we can see that the analysts are looking at this company as a strong buy. And when we look at the financials, we already know that this company has been losing money and is expected to lose money in the future, but it did have some potential. When we look at HEXO, we can see that this company, not only is it looking like a buy in the short term, but it's also looking like a strong buy in the long term. And we can see that Andy over here says a few more days we'll see an earnings report. If it's not good, I'm done with it. So Andy seems to be fed up with HEXO. HEXO, the forgotten one. Don't worry, your time is going to come real soon. By the end of the year, one of the fastest growing companies in 2019, going to go up 2006% on revenue. 2006% on revenue. That's what Motley Fool said. Wow. So it looks like Motley Fool is also interested in this company. So when we look at the technical analysis, we can see that it's looking like a buy in the short term and also in the long term. We can see the R3, the R2, and the R1 in the red over here, but the S2, S1, and S3 look in the green. So we can see these are all good positive signs over here, and this company does have a lot of potential. So despite this company's potential, it seems that it may increase in the long term. So we can see over here the snowflake description for HEXO. We can see the health. This company is looking very healthy, and the future is also looking very bright. So bright, as a matter of fact, you have to wear shades. But the bad news is that we can see the dividend, the past historical performance, and also the value of this company seems to be very poor. Now what they're saying is flawless balance sheet with high growth potential. The HEXO Corp, through its subsidiaries, HEXO Corporations, produces, markets, and sells cannabis in Canada. And we can look over here. HEXO has a significant price volatility in the past 3 months. And here's all the competitors: APHA, EMH, HUGE, WMD, NINE, JWCA. You can see all of these are its competitors. when we look at the value, we can see HEXO undervalued based on future cash flows and its price relative to the stock market. We can see that it's actually overvalued. A good time to buy is in the $4 range. So right now it's kind of looking kind of expensive. HEXO's share price is above the future cash flow. It's not available at a moderate discount of greater than 20%. So we need a discount. That's what we need. We need HEXO to be much more affordable, on the $4 range or even cheaper. Then we should buy. HEXO share price is above the future cash flow. It's not available at a substantial discount greater than 40%. HEXO's loss making. We can't compare its value to the US pharmaceutical industry average. HEXO is overvalued based on assets compared to the US pharmaceuticals industry average. When we look at the future is actually looking good. We got an 80.5% annual growth in earnings. We can see the earning growth is looking much better than the revenue growth. And we can look at it's much more powerful HEXO than the market, than the pharmaceuticals. So this is looking good. We can see that the estimated revenue is also looking good. We can see the earnings. The earnings didn't quite actually meet the revenue over here, but we can see that the past and future earnings per share, we can look that the historical is looking kind of poor, but we're expecting it to increase in the future. We're expecting it to increase, and by the time it hits 2020, definitely when it hits 2020 to 2021, in that range, this company should be growing a lot by then. So buy a bunch in the $4 range, and you should see by 2020, if you wait it out, you should have a lot of money by then. HEXO is not expected to efficiently use shareholder funds in the future. Return on equity less than 20%. So we can see right here, performance in 3 years, return on equity. Now when we look at the past, we can see that HEXO has actually been doing poor. Worst in the market, worst in pharmaceuticals. We can see that the HEXO 5 year is actually a lot better than the HEXO the 1 year. HEXO does not make a profit, and their year-on-year earnings growth rate was negative over the past 5 years. Unable to compare HEXO's 1 year earnings growth to the 5-year average, and it is not currently profitable. It is unable to compare HEXO's 1 year growth to the US pharmaceuticals industry average, and it is not currently profitable. And we can look that the revenue is looking kind of good over here, but we can see that the performance last year not so good. The return on assets, the return on equity, the return on capital, all close to the negative 10% range. It is difficult to establish if HEXO has efficiently used shareholders' funds last year. Return on equity greater than 20%, and it is loss making. It is difficult to establish if HEXO has efficiently used its assets last 3 years. In the last year compared to the US pharmaceutical industry average. The return on assets, as it is loss making, it is difficult to establish if HEXO improved its use of capital last year versus 3 years ago. Return on capital employed, as it is currently loss making. We can look at the health of this company. This company is looking rather healthy. We can see in the long term, the short term, but the net worth is actually from the liabilities to the assets. We can see that HEXO is able to meet its short-term 1-year commitments with its holdings of cash and other short-term assets. HEXO has no long-term commitments. This is good news. We can see the net worth increasing. This is good. Debt is very little. HEXO has no debt. See, this is beautiful. HEXO currently has no debt. However, we can't compare to 5 years ago, as we have no data for that period. HEXO has no debt. It does not need to be covered by operating cash flow. HEXO has no debt, therefore coverage of interest payments is not a concern. And we can see the dividend. This company is offering no dividends. Zero. Zilch. Nada. Zero. It's unable to evaluate HEXO's dividend yield against bottom 25% of dividend payers, as the company has not reported any payouts. Unable to evaluate HEXO's dividend against the top 25% market benchmark, as the company has not reported any payouts. It's unable to perform a dividend volatility check, as it has not been reporting any payouts. Unable to verify if HEXO's dividend has been increasing, as the company has not reported any payouts. So it's unable to calculate sustainability of dividends, as HEXO has not reported any payouts. It's an efficient estimate data to determine if a dividend will be paid in 3 years and that it will be sustainable. These are all, we could see that it just refuses to pay out dividends. What's up with that? What is the CEO of HEXO's salary, the management, and the board of directors' tenure, and is there insider trading? So we can see here, let's refresh this page. For some reason, the image is not popping up over here.